Hello guys, Joe with Bitraged. So there were a couple comments from the last video I wanted to address here, just so we're clear and so there's no misconceptions about what we're trying to say. One of the comments was, isn't 6800 the completion of this wave as was 5800 for the last drop? And the other question, the other comment, said that 7200 was the absolute bottom, where we're going to see the bounce to all-time highs. And I've seen quite a few people call 7200 as the absolute bottom where we're not going to drop below. And so we're going to talk about that today. And I want to solidify reversal zones, support zones in your mind so it makes a little more sense. Generally speaking, when you're drawing a support zone, a reversal zone, the candle bodies are going to be favored by the market over the wicks. So if you look at how I've got this drawn here, for several days there in November, we did nothing but test 8200. So that developed solid resistance at that point. When we crossed above it, it developed support. So if you come down here to where we are now, you can see that the last candle yesterday came up to 83, 8200. This line here was not able to push above it. And then today, we're pushing above it, we're pushing into this zone. But the top of this zone and the bottom of this zone are more important than the actual inside of the zone. So what I mean by that is 8800 is pretty major support, and 8200, 8300 in that line there is pretty major support. Inside this zone, yeah, there's support. At about 8500, there is support. But the top and the bottom are more important to this support zone, this reversal zone. So with that in mind, looking at 7200, do we have anything in 7200 to really call support? We have the middle of all these candles. You know, you could say we have the top of this candle here and the bottom of this candle. That is not that major support, it's just a run up. Really, 7500 is more of a support level than 7200. So if we were to draw this out here, and again, we're going to favor the bodies of the candle over the actual wicks. Alright, so we have that drawn here. As you can see, the top falls about 7500, the top of these candles, and then in through here we didn't quite get to 7500, but it was like 75. And again, it's not always perfect, but this 7500 level is going to hold as support more solid than 7200. Now, we did drop to 7200 on this wick and then came back up, so it is possible that we could enter this zone, drop to 7200, come back above it, and then trade in a consolidation pattern. But the bottom of this zone here at 6800, that's the bottom of these candlesticks. We did drop all the way to 5800 on this run in February, but that was the wicks. And we could see a similar thing happen. We could enter this zone here, really catch support at about 6800, but see a wick fall all the way down to 5800. And why we fell to 5800 is, I'll just draw a line here. It's the bottom of these candles here, it's the top of these candles here, and that's why we fell to 5800 decisively. So as we come down, we're going to be looking from 7500 to 6800 to likely catch the actual bodies of the candle, but to see a wick down to 5800 or in the lower 6000s is not unlikely. You know, just looking at this chart on the daily, Bitcoin loves these super spikes down. Here in December, we went from an open of about 15,000 all the way down to 10,000 before we came back up and closed at 14,000. That's just crazy. So it's not unheard of, and it's pretty likely that we'll see a wick drop into the lower 6,000s. In this run here, we had some pretty serious sell pressure. That's important to realize. If we see a similar scenario where we have a lot of pressure to sell, which we do at this point, and that pressure continues or intensifies, the likelihood of seeing a wick on the daily drop to the lower 6,000s to 5,800 as this major support is pretty likely. But it is important to watch this zone here. Now you could draw this zone a couple different ways. So I'm drawing it like this because I'm basing it off this all-time high back here and then the candle bodies here. But if you wanted, you could flip it and you could draw it like this. So we're basing it on the bottom of these candles and the bottom of these candles here. And then that would be your major support at 6,800. But like I said, to see a wick come down to the lower 6,000s, even to 5,800 where there is major support, is not that unlikely. And really we have to watch the market. We have to see what happens as we drop from this level here, right around 8,300. As we drop below 82, 8,300, you'll likely see selling pick up and intensify as we go lower, getting into 7,000s again, the lower 7,000s, and then 6,000. We're not sure what's going to happen. We could really sell off quite fast and go down to 5,800. We're going to see support in this range here, in this zone. It's going to happen. Now, nobody knows whether this support is going to hold for a run to all-time highs. Nobody knows that at this point. We don't know how far we're going to go, but we're going to catch support here and we're going to make a run. Now, it's possible we could make a run, fall back off resistance, come back down, and break it. So really all we can do at this point is watch the market, see what happens in the market, and then go from there. So I hope this clarifies some things for you. The market generally favors candle bodies over the wicks. So if you're looking at a reversal zone, you're trying to draw a reversal zone, a support zone, you generally want to favor the actual bodies of the candle over the wicks as your support reversal zone. But like I said, in the Bitcoin chart, we could see a spike down to 5,800 from 6,800. It's very possible. You know, we've seen that all through this chart. So we really don't know what's going to happen until we actually get there and see how the market interacts with support. But that's going to do it for the video. If you have a question, leave that in the comments. We'll do our best to get to those as we have time. We're approaching 10,000 subscribers and we'll probably hit that here by the end of the day. And so we're genuinely appreciative of your support. We wouldn't be doing these videos if we didn't have you guys behind us. And so we're just happy to see so many of you learning from these videos, gaining value from these videos. That's why we do it. That's going to do it for the video. Thanks for watching, guys. Take care. Have a great weekend.